Everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 16th of September, 2022. Ugly week for the market. SPY lost a little over 5%, NASDAQ close to 6%. The Bitcoin was down close to 8%. Just a terrible bear market there. We're down 19% year to date. They're going to start calling it a bear market again when it hits 20%. Most foolish thing ever. We're in a bearish environment. We have been for the year. The most recent high was at that declining 200-day moving average. You're going to see on here that I've already drawn in everything that I'm going to talk about. That's because I've already recorded the video, but the audio didn't work, so this is the second recording. Anyways, the market, as we know, lost a lot of ground this week. So let's take a look at what happened here. On Tuesday, we had the CPI reported. So Monday, we knew that the CPI was coming on Tuesday. And, a year and a half, 2 years ago, the CPI really meant nothing to the market. But we're in an inflationary environment. Every economist, every TV announcer, I'm even talking about the CPI because we get movements like this based around it. So it's important. So what we need to do is when the market rallies ahead of an event like that, you have to say, is the risk worth the potential reward? To me, it's similar to an earnings report that I have accumulated profits. I've taken some profits along the way. I held a little bit of long position and regretted it, of course, first thing Tuesday morning, but I got out immediately. Within the first 5 minutes of the day, I got out and flipped my exposure to short later on in the day after the test of the volume weighted average price from the CPI. So as soon as the CPI came out and we saw that there was this big movement and volume around it, that told us this was an important level to the market. So I wanted to measure how price acted in relation to the average price since that. And you can see later on that day it found sellers, and then on Thursday, Wednesday afternoon and Thursday afternoon, it found sellers near there, and it told us the sellers were in control. We also knew that because it was making a very clear pattern of lower highs and lower lows. Today we gapped down, kind of chopped around. We traded above the daily volume weighted average price, but just sticking on this 15-minute time frame, we see that this was a big band of support previously. Well, guess what? Support broken tends to do what? It tends to act as resistance. So if it gets up into that area next week, you have to remember what's coming. We have the Fed coming next week, and we also will see that this 5-day moving average is bearing down on it. The volume weighted average price from the prior low, the volume weighted average price from the beginning of the month, the volume weighted average price from the CPI. They're all going to be bearing down on this market, and this will become, if we see further bounce, this will become a likely level of supply. And what I would be looking for is the opportunity to break, as a short. Maybe the volume weighted average price from today's low will start to look like this. This is anticipatory analysis. It's not hindsight. It's looking ahead and saying, here's the potential scenario. And maybe the Fed has already built in the worst fears and it doesn't do something like this. But what seems most likely? To me, it seems most likely like this. I would want a short here with a stop, maybe half my stop above a high there, half my stop above a high there. Or maybe it just continues to go higher and we don't set up with a short sale opportunity. That's always a possibility as well. But the bigger picture, the weekly time frame, we're right on the volume weighted average price from the COVID low. We're below the declining 20, 30, and 40-week moving average. Overall, the path of least resistance, it's easier for the average stock to go lower in this current environment than it is to turn higher. The NASDAQ is also, it's below the volume weighted average price from the June low. And on the weekly time frame, you can see we're below that orange volume weighted average price from COVID. We've closed below it 3 weeks in a row now, and we're coming down to the volume weighted average price from the 2018 low. That's also where we see the volume weighted average price for NVIDIA, the 2018 low. I've been talking about that. Not shown here is a 200-day or 200-week simple moving average. So a 200 period moving average, the period, of course, being weekly here. That's also in this area. So it hit that level and it bounced a little bit, but this is what's more likely for this stock. If they don't scare you out on the way down, they will likely wear you out. Just look at the last time we had a significant decline in NVIDIA from 73 down to 30. We had a 50, 60% decline here. How long did it take before the buyers had actually gained control? It took about 9 months. that might mean that this thing's ready to go back higher in May or June of next year. I'm not here to make predictions, but I'm here to anticipate the potential scenarios and get involved when it makes sense from a price based standpoint. And right now it doesn't make sense. You might have purchased today, made a little bit of money, and if you got involved and now you want to raise your stop, let's say you're thinking this is the bottom, well then put your stop below here and start to raise your stop if the stock continues to move higher. Maybe you accidentally caught the bottom. It shouldn't be your goal to purchase the low, but instead to say the trend is lower. It's still got a declining 5, it's got a declining 20, 50, 100, 200-day moving average. So the trend is lower. If you're going to trade short term, take a little bit off into this type of strength and let the market tell you whether or not it makes sense to continue to hold. If it unfolds like this, like I've sketched out, then great. Maybe you caught the low by accident, but I'm more convinced that we're going to see a longer term, that it's going to take these longer term moving averages to come down, flatten out a bunch of false moves before it can actually move back up. We've seen that in, Zoom. Just because the stock, rallies 50%, doesn't mean the downtrend is over. We've seen it in, all kinds of stocks. Even go to the ARK fund. It's still in this longer term decline. If they don't scare you out, they'll wear you out. There's no point buying this garbage because it's garbage. It's in downtrends. It's a money losing event here, and product, it's more likely to come down and test this low and maybe even make a lower low before that longer term accumulation continues. If they don't scare you out, they'll typically wear you out. The shares of the NASDAQ were perfect along that volume weighted average price from the CPI. And I pointed this out every single day this week on Twitter in a less than 2-minute video. If you're just following this on YouTube, I say it all the time, you're missing so much information that I put on Twitter. The handle for that is in the description of this video. So follow that and go, look at Twitter. By the way, on YouTube, thanks for all the likes that you guys give me and sharing it and the comments. I read them all. And the quality of the video, I have nothing to do with this. I record it in high def. What YouTube does with it and how they process it. I'm told that initially, when I hit the play button, it is in low quality, but later on that day it will, become available in higher quality. I just put the content out. You guys decide what to do with it. It's free. Don't complain. The Russell 2000 came down, made a slight lower low here. Here's what I think is most likely to occur. It's not a prediction, it's just what's most likely. We're not in the prediction business, we're in the anticipation and risk participation when it makes sense. If it makes sense, it might make sense like this. These volume weighted average price levels and the 5-day moving average come down on it. I want to sell short weakness. I don't want to sell short strength. I want to sell short weakness after the rally, after it starts to turn sideways. As it breaks down, I want to get involved in that momentum with a stop above the most recent relevant lower high. That would be right here. If it breaks down and goes back up, well, then it makes a higher high. Why would I continue to hold on the short side? It makes no sense. It's still in a primary downtrend. It's stuck below the volume weighted average price from COVID. It just looks terrible. Semiconductors were up today, but not on the week. They're down, like we said, close to 6% for the week. They're below the declining 20, 30, 40-week moving average. They're below the volume weighted average price from the COVID low. They just look ugly. They continue to trade terrible, lower highs and lower lows on all of these time frames. Biotechs are still just doing a whole bunch of nothing in here. The 200-day moving average, which of course is basically the 240-week moving average. So, for a longer term, we're going to need to see something like this for a longer term downtrend. These shorter term moving averages start to crisscross. The market does maybe something like this. That's the best case scenario. What we might end up happening is it hammers away at this support near 120 and then breaks down and goes and tests it. I'm not convinced we've made a low in any of these markets. There's no reason to be aggressively buying for any time frame, not that I can see. So I'm going to end it here and wish you a good weekend. Thanks for tuning in.